There's a really great section in our last podcast, so we clipped it out and want to share it with you guys separately here.
The awesome thing about a side hustle is hopefully you're making money. The downside to the side hustle is the IRS wants to know about it. And there's some stuff you need to do on your tax return, but we've got some solutions for you. The cool thing about a side hustle is this gives you tax planning opportunities to write stuff off you never even thought about. And so we want to break that down for everybody today so you know what to look for and where you can save when you're filling out your 1040. Just to understand the way the 1099 works is this is going to go on Schedule C on your 1040, which is where you're going to claim the income. And some of you might be a small business. You might have an e-commerce business. You might be doing some consulting on the side. Some people didn't send you a 1099. Yeah. You didn't even get a 1099. Well, you still have to claim the income, okay? It's called tax fraud to not do that. So you still need to claim that income, so you'll add up your 1099s. And some of you, that income might be coming from a 1099. You got a 1099 from Uber or maybe a 1099 from OnlyFans. You got to gather that on the income side. But where the fun is and where the savings are is over here on the expense side. I don't want this to sound negative, but what's happened in 23 is already done, okay? Good tax planning needs to be happening in the tax year. So for those of you that are new to this can sometimes be a wake-up call to be, I should have been doing this in 2024 on my 2024 income. Now, obviously, when we're talking about expenses, again, I just want to keep this basic. You got a 1099 for 10 grand. If you can pull up $10,000 worth of expenses, you will pay no tax on that 10 grand. That's the name of the game here. We want to gather as many expenses as we can. You do not need an entity. LLCs, let me make sure everybody understands that, do not save taxes. A lot of people think, I set up this LLC, I'm gonna get all these expenses and write-offs. The LLC doesn't create any different tax outcome for you. It's a pass-through entity. What goes on that just flows right through that LLC onto your personal return anyways. Now, an S-Corp can save you taxes. We're going to hit that. And when you want to use the S-Corp, it's not necessary for every side hustle, but for some of you, it might. Don't stress about the entity now. Think about an entity for being legit as a business owner, looking more official, getting some asset protection if something happens, or maybe the S-Corp, of course, if you're going to fall into that boat, which we're going to hit in a second. I want you to look at your bank account. And for those of you that do not use a separate bank account for your side hustle, your business, you are doing it wrong. You're going to miss stuff, okay? You don't have a bookkeeper. You don't have an accounting and finance department tracking every dollar that's spent. You are going to miss expenses. Now, there's a couple of things that are write-offs that aren't in the bank account. And these are ones you got to think about because it's not in your bank statements, even if you're going through every line item in your personal bank account because you didn't separate this stuff. First was home office. There's a simple method of the home office that many people, particularly people with a side hustle, take. Doesn't matter what's in your bank statements. Also, auto. Most people are going to do mileage. For any of you new small business owners or somebody doing this for the first time, I want to make sure you understand how powerful this is. Just think of the real estate agent, common side hustle or someone new in the industry, for example. You sold a property or two that year. You got your 1099. If you had 10,000 miles, you get to take 65.5 cents a mile on that. That's a $6,550 write-off. That's an expense. If you do not catch that, you're like volunteering more money to the IRS, okay? Make sure you're tracking that, but then start looking through the bank account and be like, did I use this in the business? Were these supplies I bought for my home office for the business? Am I driving Uber? Or is this like an air freshener or something I got in the car? Or some of the candy I'm giving out or the water bottles or whatever it is? Start thinking of things in your business. Now, everybody's industry is a little different. There's materials, there's supplies, there's the mops and the vacuum and stuff. That's unique, of course, to that business, Many people took a training course for their industry. The realtor that had to take the licensing class and the training class, and there's some cost to that. Not only the travel and stuff to get back and forth to that class, but also the cost of that class in and of itself. Some of you might be doing a certification training in your industry. That training is a write-off. That's an expense. Now, if you went to like a college and you're like, well, I went and got an accounting degree, or I went and got a physical therapy degree, or I went and got a law degree, and now I'm a lawyer. Do I get to write that off? No, they're going to be below the standard deduction if you even need to file a tax return because you're not going to be paying them tens of thousands of dollars. So you're going to be under the standard deduction. They need to file a return. So expenses comes off you where you do have a tax you have to pay and you have to file a return. And we push it over the kids if they're legitimately working in the business. Now, one big thing I think that happens when people are doing this on Schedule C, right? They picked up all their 1099s and any other income they might have had in the side hustle. They're writing all this stuff up that we talked about, their auto, their travel, their home office. And then they get down to it and they're like, wait a second, what is this self-employment tax? This is even before I pay my income tax. I've got to pay 15.3%. When you get a W-2, what happens when you get a W-2 is 7.65% is coming off of your paycheck and going into Medicare and Social Security. Everybody's used to that on a paycheck. But you know what your employer's doing that you don't see? They're also paying in 7.65%. It's just not coming out of your pay. The employer is paying that. It's a cost for them because they have to pay into the Medicare and Social Security system too. Now, when you're self-employed, guess what? You get to do both. You get to pay for the employee and the employer, and it totals this 15.3%, which is painful. And you see that add up, and you're like, holy cow, and I got to pay income tax on this too, plus 15.3%, and I'm in a 30% federal tax bracket. I'm paying 45.3%, or whatever it adds up to in your scenario. But then I'm talking about state tax. So there's a strategy on the self-employment tax.
So when you see this come, this is when it's time to get a consultant to help analyze the situation. Schedule a consult with a tax advisor.
Now here's why the S Corp matters. Using an S corporation or an LLC tax as an S corporation, you can minimize the self-employment tax. We can reduce how much self-employment tax you have to pay because the S Corp has a strategy built into it that we implement with our clients every day. Every small business owner client of ours, I have an S Corp, Mark has an S Corp, are using this strategy to minimize that little tax, self-employment tax, that again is even before we get to paying income tax at whatever tax bracket you fall into. But it takes the S Corp. We can't go back in time and set that up, but we can do this moving forward. So if that self-employment tax line was a little painful for you, we want you to be thinking about doing the S Corporation. Think about this. This needs to be on your return. This is what's going to save you money. This is a Dave Ramsey quote. Every once in a while, that guy hits gold. I don't agree with everything, but every once in a while, he has some gold. Okay, this is what he said. The fastest way to get wealthy is to get control of your income. It's about controlling who gets your income. Guys, as a small business owner, do you know what the number one expense of anybody making money as a successful small business owner, side hustle, big business is? Taxes. This is how we get control of it, is by doing good tax planning. Good tax planning here is going to minimize what goes to the IRS and what gets to stay in your pocket. That is how you build wealth. But for any of you self-employed that got this 1099 and now you're dealing on Schedule C, if you made good money and you're like, I'm looking for more write-offs, you can set up what's called a solo 401k. You've made some good money in this business. You're like, dang, I'm getting hammered on this. Let's think of the solo K. We set these up in our law firm, KQS Lawyers, and handle the accounts over at our company, Directed IRA and Directed Trust Company. So we're doing this every day. Every day we're setting up a solo K for a client. So some of you are like, oh man, I listened to your guys' podcast. I need to do this S corporation I heard about because I got crushed on self-employment tax. Well, you're going to need to do a BOI on that. Now, if our law firm sets it up at KQS Lawyers, we'd love to help you, of course. We do that for you. That's part of the service. If you hack it out on your own online, I'm just telling you, those online services don't know what they're doing. And did you make sure that got filed? And when you add up the cost of LegalZoom or a lot of our competitors in the law firm, it's more than using a law firm and being able to talk to a real tax lawyer who's going to help strategize for you.
I hope you found value in that video and took something away from there that can help you on your wealth building journey. Make sure you're subscribed though to the channel because I got tons of information I want to share with you to make it easier, faster to build wealth. We'll see you next time.